Hello and welcome to Leviathan News. It is September 4th. It's Labor Day, but we're here with that Sigma grind mindset, the DeFi advisor. Garrett's off enjoying the wonderful weather that is here. Well, he's on the West Coast, so he's probably having a good time barbecuing. Who really knows? But unfortunately, we got to lead with some bad news, and that is that stake.com was hacked for 15 million, it looks like.
That's a lot of money, man.
It is a lot of money. And
like, what do we know yet?
We don't know anything. What's weird is that we were looking at the transactions just before it happened. I mean, it literally just happened a couple of minutes ago. And PeckShield posted about it 20 minutes ago with the ominous tweet saying like, hey, what's up? Can you check this out? And
the tweet you least want to see on your project. Huh?
Yeah, exactly. So the interesting thing about this was that, let me pull up the tweet. Okay, so PeckShield said, hey, Stake, you may want to take a look, posted the address, and was looking at this, and there was 6,000 ETH that was transferred out. So first they did a 1 ETH test transaction, and then they took 6,000 ETH. They then transferred out 5,900 ETH to another address along with the other 97, and then they sent 1 ETH off to a couple of other places. But looking at the addresses and looking at the transfer, this wasn't a flash loan attack, and there wasn't anything in the transaction data that would show, you know, that this was maliciously done. So this would raise the question, at least for me, like who on the inside would have access to these funds, and because there must be a multi-sig or something, right? Like who?
Yeah, makes sense. I'd imagine so.
Yeah, this looks like an internal transfer. Like it came internally. We don't know what's happening on their platform, but let me pull this up again. Sorry.
So how do
here's the Etherscan, because typically like here's the Etherscan. Now that we have it at the window up, and usually when there's a flash loan exploit, there's like 30 different things happening here, but there's no input data, which shows that this was not like an externally caused, this wasn't dealing with like a smart contract, right? And it's just very clean. There's just 6,000 ETH transferred out. It looks like they did a 1 ETH transfer first, and then they took the whole 6,000.
How do they know on PeckShield that it's for sure like some kind of an exploit? Like, because, like you say, these just look like transfers.
Yeah, but check it out. Like, so I'm gonna follow this address, right? So just following this address, he takes the 6,000 ETH and then he sends 1 ETH to a brand new address. And then opening up that tab, this is the ETH that comes in. It's not here, but then he transfers in $3.9 million worth of Tether and starts selling that Tether off in chunks for ETH, right? And so chunk. And if we look back at the transaction page, he ends up with 2,390 ETH from here. So now he's up to like 8,000 ETH. Okay, now if we go back and we grab another one of these, so this is another one. He sent 1 ETH to this address also. And then he ends up with 675 ETH here. And this was USDC that he takes out $1.1 million worth of USDC and then sells it off for ETH. Additionally, coming back, we can see that the last one is probably the DAI that gets sold off. Yeah, so he takes the DAI as well too, $900,000 worth of DAI, and sells it off for ETH as well too. And very interesting because, you know, like this is like a strange, he must have had internal access. That's the only thing that I can say about this, that there must be something happening. And he's transferring something. Is he transferring his
some kind of an inside job, it seems.
Yeah. And let's see. Here's a message that people are sending. Let's see if Hey, I'm a big fan. Can I tip? People are depraved. What other messages are being sent to? Yeah. So if you're sending 0 ETH messages to the hacker asking for tips, like there must be something wrong with you. Yeah. Here's another one. No more gambling. Somebody else says. I'm sorry for the people that had money in stake.com. Stake.com was a gambling website. I can't bring it up because my IP is blocked off, but you could gamble on things outside the United States. And now it looks to be exploited. That's quite a lot of money, actually, 15 million. I mean, that's no laughing matter. Definitely happened. Oh, Stake just announced that they suspended deposits and withdrawals. Well, that confirms it. So we had kind of like published it without confirmation, but we have it now. Let me just pull this up. That I guess the team came out and said, Freakway.
I still don't see anything on their Twitter, to be honest.
Yeah, they haven't announced it, but they have stopped the like site operations. Yeah. So unfortunate for anybody in stake.com. And I'm sure we'll hear more about this story coming soon. Yeah, Zach XBT said it totals about $15.7 million. And here's a flow chart of everything. Yeah, so USDT, the ETH, you can see that they brought the 6,000 ETH in, and then they deposited it all, took it all out. And now it's gone. We need that meme. Yeah, and now it's gone meme. Really unfortunate. I thought we were just going to have like kind of a quiet day of stories, but we have another hack.
It usually happens on the quietest days, you know.
Exactly.
The quietest day of the week, the weekly rug.
What's weird is that there's still money on the account, right? Like looking at the account that was hacked, they still have 210 ETH there, and they still have several $1 million worth of other tokens there. So really unfortunate. I wonder. Yeah.
Who knows what goes on there?
Yeah. So the thing about Stake is that they're well known because they had been using a lot of like bigger influencers to bring people on, and but maybe they'll be fine. I mean, they have decent revenues. They've gotten like $2 billion worth of inflows since they've started. Like taking a look at the Dune dashboard, this isn't anything that is Stake. I was looking at it this morning. The Dune dashboard shows a pretty good story, right? So inflows have been like very nice. They've had over $2 billion worth of cumulative deposits, and the total amount of estimated profit for the platform is about 43.1 million. So it probably has enough on hand to cover the hit, but that hurts. Like, how long have they been operating for? Since they've been operating over a year, they made $45 million, and probably all of their profits, like, because they've probably paid taxes and everything.
Yeah,
like they're getting hit for probably 60 to 70% of their on-hand cash, maybe more. So really unfortunate.
Also, people will kind of be reluctant to use the depth now.
Exactly. Yeah, probably. That's the thing.
I see that revenue growing a lot.
Yeah, I mean that's you know,
there's hope for them that they can manage. Yet wouldn't advise anyone on using their services. But although at least now you say that transactions like withdrawals and deposit there are suspended, just deposit, just withdrawals. How does it
everything's suspended.
Wow, what a mess, man. Really, DeFi keeps proving that it can be so messy.
Well, this wasn't even DeFi. I mean, this was like a company that ran
Yeah, I'm sorry about
gambling,
the
like a gambling project.
because I actually do think that gambling and all that stuff, that's gonna be one of the biggest narratives of the next few years, in my opinion, because it's such a it's an online service with so much demand and with so much issues on the web 2 that I know that so many teams are working on that
Yeah.
front, and people are usually willing to put their money into this kind of stuff.
I think they'll be okay. I mean, the gambling sector has been super hot this quarter. Rollbit's been doing really big numbers, and looks like these guys have gotten $2 billion worth of cumulative deposits. So maybe there's saving it somehow, but we'll see.
Hope they caught it on time to be able to bounce back.
Yeah, I've got another story that I wanted to bring up. Over the weekend, I saw this, and apparently it was common knowledge, but apparently like the Unibot team has been a part of like other rugs. So they've been a part of some other projects that have not really gone well. So this is Juggernauts. They talked about like, let's continue reading, right? So they ran D-Tools, or Degenerate Tools, was a trading protocol launched in May 2020. And they had like mirror sniper, gains analysis, sniper sniffer, etc. And it looks like the same UX UI that was built for D-Tools was being used for Unibot, right?
But even if so, was D-Tools
Yeah, they rugged.
Illicit?
Yeah, so they, despite difficult market conditions with low liquidity, D-Tools hit a market cap of around 3 million before petering out. So someone funded 9 ETH from the D-Tools deployer and then rugged within a week. And then they launched another one, Sauron, in October, and Sauron died in November. And then, yeah, it came on, and they have screenshots of everything. They've gone through and done a bunch of like address analysis. Always use fresh addresses. I don't understand why people don't. Like, people get lazy. That's the thing. People get lazy is they just, all it takes is one mistake to get caught, right?
Yeah. Though I'm not really sure I understand that anything specifically illicit that they did on is that for sure the same team, and is anything there specifically for sure illicit, or just stuff that didn't go well?
Well, it's highly probable that they ran projects before that kind of like either flamed out, or they just like, you run a project for 3 months, it's not growing, you want to work on other stuff or relaunch or something. They just pulled liquidity and moved on.
Yeah, because I also think that there are a lot of behind the scenes wars right now between Unibot and another competitor. Did you hear about it?
Yeah, I've seen about that. But like, what are your feelings on if you ran a project and it didn't go well, and like people lost money and stuff, and you pulled liquidity at some point? Like, how would you feel about that project, like launching a new token and growing into a $100 million protocol?
Well, if you made people lose money, like if people lost money on your project without them doing anything like they weren't supposed to do, and you just, like you say, you pull liquidity, then that's not cool at all. Especially if you make a lot of money, like with your next one, I'd imagine that you'd want to repay the people that you feel like you owe money to. Don't know enough about those projects though to know for sure.
Well, Unibot is down almost 60% from its highs, peaked out about $210. It's down to $90 right now, $87. So we'll see if it's able to survive the next few months after the initial hype around it. Over the weekend, we also had a proposal from DYDX to switch to D4. This pretty much unanimously passed. Only 43 DYDX voted against it. And it was bound to pass anyways, right? Because it's the new like V4 system. And
also they've been mentioning it for a while now, right? Like this was talked about last year, I think.
Yeah. So what's interesting about this is that I don't know if you knew this, but right now DYDX is running on Starkware, and the new V4 is going to be a Cosmos chain. Interestingly enough.
Yeah, I heard something about that.
Yeah.
Is it going to be like the biggest thing on Cosmos?
Maybe. What's the biggest Cosmos chain? Actually, that's a good question. Actually, I'm not exactly.
Cosmos, I never use it yet.
I mean, Cosmos is big. I mean, Cosmos has like quite a robust ecosystem, but I'm not really sure. Here, I'm going to check right now while we're looking. So, the largest project on Cosmos, other than the Cosmos token, is Kronos. So previously, Crypto.com is it Crypto.com's blockchain? It's a 1.3 billion. Injective at 500 million. And Kava at 470 million, Thorchain at 433 million. So, and Terra Luna Classic at 348 million. That's crazy.
How does that thing still exist, man?
Yeah, I don't know.
How is that possible?
So DYDX is trading at $360 million at the moment. And so that would make it in the top 10 largest Cosmos networks.
Yeah, I'm sure it's going to be huge though.
Yeah, so it would actually just barely eke out Terra Luna Classic.
I think they can outgo Terra Luna Classic even if things are not perfect.
Yeah, so that's cool. There's also going to be some DYDX staking and some other cool aspects that hopefully should drive some new user base over there. But DYDX is cool. I mean, it's the future of decentralized perpetual trading.
I always hear that they have a very good trading experience, but to be honest, once they're not on Ethereum L2s, personally, I don't use that stuff.
So, have you used Friend.tech in the last little while?
No, I haven't. I actually wasn't really able to sign. It kept giving me all kinds of like all kinds of bugs. Was just not able to actually create my account. I tried for like half an hour or an hour, and then I said to myself, "Come on, man, I'm going to the next thing."
So Friend.tech has kind of been chugging along. There's some usage that's happening over there. Taking a look at the Dune dashboard, they've now eked up to 4.5 million. I believe is it like 4.3 the last time we checked. So another $200,000 in protocol fees. But things have kind of like leveled off a lot. Like you can see the amount of transactions like peaked back on the 21st of August and now has come down to pretty much lows. Like yesterday's was almost the lowest, about like 20,000 transactions, right? But seeing how many of those are bots potentially, fees, let's see. So fees in ETH have dropped to almost a low of 17 ETH, which is still a lot. I mean, 17 ETH fees is still pretty significant, but it's not the 500 ETH fees that it peaked at on the 21st of August.
Yeah. The initial hype is for sure over, and let's see if they can survive it in the next few months, if they can remain relevant enough and keep the people interested.
Exactly. So one thing that they did add, so they've added photos to Friend.tech. They also added credit card payments. They integrated like one of those like payment processors. So now you can just buy ETH. It'll get deposited into your Friend.tech account when you create an account, which is a good step.
Yeah.
But
still, people have to feel like that's the whole thing is still happening. And it's still hot. For example, and up till now, at least, I don't think that at least in crypto, any app has really proven that it's relevant on the social level, except Twitter. You know.
Yeah, and Twitter's probably going to make a big push for like crypto here in the next, or like digital
Yeah,
payments here in the
I
next.
agree. I don't think that in the long run, like I don't see how a new social media company actually changes stuff. But who knows, right? Like I'm not saying that I know for sure, and it's going to be very interesting actually to see like how stuff like Lens try to like adapt and like create their own relevancy. Because as a basic user right now, why would I really look for other information other than Twitter? Like still, everyone is actually on Twitter pretty
Yeah.
much, and the rest is just like hype. Yeah, a few weeks, goodbye.
So there was a story about this like developer on like so a developer on Algorand, or like the main developer for Pact, which is like the Algorand DEX, the main one, like just left, saying they're having funding problems. They're stuck at like 10 million TVL, which is like nothing. Like I didn't even know about this DEX on Algorand. Obviously, it's bear market things, and Algorand's
Yeah.
been like hyped as this like the next RWA platform or something, but
Yeah. But bear market really shows like the truth, I think. It's my official first bear market, let's say. And I really think that, it allows such a clearer perspective on what actually goes on in the market and what's the actual active capital within all these new funds. And like, for example, are you that surprised that the biggest DEX on Algorand is that small and that it's not pushing out like positive signs? I can't say that I am because I don't know anyone that has ever used Algorand. Honestly.
yeah, and that shows in the price as well too. I mean, so Ethereum is up what 50%, 60% since the start of the year. Bitcoin is up what 40% as well too, but Algorand's down 50% this year.
Yeah, all these alt L1s, it's like last cycle's narrative. I don't understand how this stuff bounces back. Now, who knows, with the amount of capital that's going to inflow once the bull comes, maybe these projects will lift themselves as well. But I can't say that myself, as the tiny investor that I am, I'm not looking at this stuff seriously because honestly, I don't think that they have a true like I don't think they have a big enough community and user base to sustain like whatever they want to sustain.
Yeah, and that's true for a lot of networks as well too. And if we look at DeFi Llama and take a look at Algorand, it's pretty bleak actually. So Algorand has 88.62 million in total TVL. The majority of that comes from one. Okay, so there's Lofty, which is like an RWA application, but I don't even know if that it counts, right? Because that's just like assets on chain. Pact has $10 million, like we looked at. Taking a look at their TVL, they were never really able to break 20. It's pretty sad. Just shows that there's no real users on Algorand.
Yeah,
Everything's
there's no actual liquidity. Even the liquidity of on some of the L2s on Ethereum is so much greater than that. Like,
yeah, and so Folks Finance, which
by the way,
is
the exploit today is bigger than that, right?
like just about like when other people are getting exploited for more than you have in TVL, like you should probably question, especially if you've been working on it for a long time as well too. There's Folks Finance, which is mostly just people farming. Actually, some decent rates on stables. You can get 6% lending.
Yeah, but how do they get these rates? Like, is it actually from new money coming in, or is it just like tokens that they issue and
No, it's just the lending platform there doesn't have a lot of liquidity on it, and so like people are paying higher rates there because there's not enough stable coins. Yeah. Let's see what else. I mean, so there's some curve stuff that I want to wait for Garrett to come back to talk about. On Friday, after we got done with the show, we had Agna, which came out and said that all funds are at risk and that people should take them off. Agna is a permissionless lending platform where it does not rely on any oracles or anything else. But they said that they identified a possible way to grief a section of users in the protocol. Like the balancer hack that came out the other day, they essentially just said that, you know, people can be griefed, and it, like, I don't know if money could be exploited, but maybe they could brick the protocol or something. And so they advise people to close all their borrows and remove collateral, and that they would be working on an update that they would announce to the community when it was ready, that people could put their liquidity back in. And yeah, let's see what else we got. We also had Gearbox, which introduced 6 high-yield Curve V2 pools, which, shout out Gearbox, great builders in the space.
Yeah, indeed. Used to have them as sponsors on my blog at some point, to be honest.
Yeah. So now you can leverage your Curve pools by 5x by using Gearbox.
We should try to have someone their own, maybe.
Yeah. So they have a couple. So for the TriCrypto, LDO ETH, CVX ETH, and then TriCurve, all are able to get 5x leverage. So with like TriCurve, you can get up to 123% yield, CVX ETH 28%, and Lido ETH 85.9%.
It's the same kind of stuff that I was telling you, that I think the bear market really helps like clear things up. Like you can see that the project like Gearbox, for example, I don't think they're going anywhere. You know, like I think they're here to stay, and they keep working and innovating through the bear. And once capital really flows in back into the whole ecosystem, I think they're going to be one of the beneficiaries. And for sure, folks, not financial advice, do your own research. Yet, you know, I think it really helps to like see who's really in it for the long run, and who's really able to properly survive the bear, not just by accident.
Yeah. I want to talk about a story that we discussed last week, and we kind of like played it off at the time, but it actually turned into a bigger story than like what we first thought. So Rune from MakerDAO came out on what was it, the 1st of September? That was Friday when we last talked, and we kind of joked about it because this post had like just come out. So he had put out this proposal saying that like the governance part of MakerDAO needs to move to a Solana fork, which he called New Chain, and that you know, he gave some really nice reasons that Solana's got a very fast implementation. It's forkable. They can hard fork it anytime they want. And this was met with curiosity and a little few questions from the crypto community who came in and were just wondering like why Rune didn't want to use like an L2, or why Rune didn't want to build their own like app chain somewhere. And obviously Rune had his own answers for this. And as a result, Vitalik came in and dumped the last of his MKR, which is strange. He had some very like, yeah.
That's a statement, man.
Yeah, he only had $500,000 worth of MKR, but he did sell it, and then he went to the RAI community and was essentially talking to the RAI people, saying that time has come to like politically influence RAI to the point where LSDs are added in some respect. So RAI is a kind of floating token that is not pegged to any sort of currency. So
that's a mean stuff, right?
Yeah, it is a means token. Yeah. So as a meme does, the RAI token is like, it's immutable. Like the contracts are out there and nothing can really be done. And so Vitalik came to the RAI community, and he was essentially like asking them to think about forking the protocol to allow for LSDs to be added. And interestingly, there is a fork of Rye. I believe it's on Optimism or like one of the L2s. Oh yeah. So also interestingly, A16 and others dumped after Vitalik did. I mean, like Vitalik's like signaling that he's unhappy with them.
Yeah.
Maker. So just to like go over this again, Maker was like one of the first dApps ever on Ethereum with DAI, right? And at this point, with Rune in his in-game, he looks to be moving all the cash that was being held on chain, off chain, into these like RWA vehicles. And then also now he's proposing that governance essentially moves off to a new chain, so that in case there's any major incidents or the need to do rollback, I don't. I mean, he has his reasoning, but he wants to be able to hard fork out of any situation using Solana, which
And also, who knows? Maybe he himself thinks that there's some kind of threat for these guys to stay on Ethereum. Maybe he actually thinks that their dApp is safer.
maybe, but I don't see how though. Like I can understand like I can understand his want to have these ultra fast transactions and to compete with banks in the long term, but it at the end of the day, it does go against the kind of ethos of what DAI was originally built for, where DAI was this like in-house dApp that allowed you to mint a stable coin using Ethereum, and everything was kept on chain, right? Everything was built on Ethereum. It was like the Ethereum project. And here with Solana, now with governance moving off and large amounts of deposited capital in Maker being given away to different RWA companies, investment companies, as well as Coinbase to go and earn yield, it's dramatically shifting the scope of what Maker was originally intended to do towards being a quasi bank instead of just a place to mint on-chain stables.
Yeah, I think MakerDAO has really done some kind of a 180 on their like vision on what they should be as a project. And they were so innovative like when they started. And I think that's kind of like what's the community's dilemma at this point. Is Rune like a visionary that sees the future that most of us don't see yet? And,
sure. But yeah, I'll agree. Like, look, his ideas. I think that I think Vitalik probably sees Maker's original sin as onboarding USDC, and as soon as they went down the route of taking in centralized stablecoins that are issued by off-chain providers, like the nails were in the coffin, because at that point you become a slave to what's happening in that connection, that bridge between the TradFi world and what's happening on chain. And you because of liquidity demands for Maker to grow, there's ever more need to convert or issue more DAI based on these like assets held in a bank somewhere. And that does go at the core heart of it against what Ethereum's trying to build, which is fully immutable, decentralized money. And
but I think that I think it's kind of it's very separated than Vitalik's vision for it. Yet I kind of think that RWA is really happening. Like we also had some headline today about the fact that the RWA TVL is growing lately, and I really think that Maker is really trying to put itself in the position to be the strongest RWA actor, it seems to me.
Yeah.
So and once if and when RWA actually happens, the amount of capital flowing into the ecosystem will be enormous, in my opinion. I do think that, and I do think it's like a part of Ethereum's own vision. I agree, it's going to cause a lot of issues. This is not going to definitely go smoothly, but I can understand, and it makes sense to me that some projects are going to choose that route. Unlike, for example, the other tip of this sphere is probably Liquidity version 1, where it's like the old Maker, probably, in a way of just like put in your ETH as collateral, mint a stable coin, LUSD in that case, against it, and like fully decentralized, and you're not dependent on any outside capital. But to be honest, to really grow, we're going to have to use that outside capital in some ways.
Yeah, I think there's like 3 routes, right? So there's the centralized route, the decentralized route, and the hybrid route. And Rune is trying to navigate the middle path. And I think that there's definitely trade-offs that you have to take for that step. And while Vitalik is completely entitled to his vision for what Ethereum is being built, I mean, there are constraints that are implied and explicit for these stablecoin operators, especially at large. So I understand like why Rune would do this, but at the same time, you know, oh hey, we got a guest.
Yeah. Oh wow.
What's going
up?
on?
Hey.
How are you?
I'm well. I didn't. Last I heard, we weren't live streaming, so I saw you guys were going live. News from Stake, so had to pop in.
Yeah. So we were just talking about the it's not even drama. I mean, it's just the politics happening at MakerDAO right now. Did you read up on that over the weekend?
No, I've been touching grass, I'm afraid. But I do find it fascinating though, because like I've been contemplating it a bit. Like the DAI savings rate is at 5% right now, right?
Mm-hmm.
And what's the Frax savings rate estimated to be? Is it going to be competing when Frax gets releases their like competitive product? Are they targeting like higher interest rates than that?
Yeah, I think it'll start about 10 and then kind of come down to 5, like what Maker was doing with the DSR. But it's not like it's a totally different product in the sense that it's not you're not getting exposure directly to treasury rates. You're just minting or just buying Frax at a discount.
Yeah, so. I still feel like that's going to be just the next narrative, though, in the same way that we saw like liquid staking Ethereum was the past narrative for the past 6 months. I feel like it's going to be like anyone that can approximate exposure to real world yields.
So we have seen yields go up over the last while. Here's RWA.XYZ. The amount of on-chain tokenized treasuries has grown since the beginning of the year from right around $110 million to $635 million with an average yield of 5.25%. Most of it's on Stellar. That's weird. So there's only $300 million worth of tokenized treasuries on Ethereum, but there's $300 million worth of this product, which is Franklin Templeton Benji Investments on-chain U.S. government money fund. Like how, I wonder what's happening on Stellar. Like why is there $300 million or $310 million worth of treasuries that nobody's using? We'll have to look into that. Also, the private credit market, according to RWA, is at $550 million. So close to, if you put, I wonder how much of that is Ethereum, probably most of it. So there's probably $700 million worth of RWAs on Ethereum at the moment.
And if you take a look at our friends at the VC Whisperer, they had an interesting piece in their newsletter about some of the RWA protocols. There were some pieces in there that I wasn't really familiar with, but the second largest RWA after dollars is gold, in fact. I didn't realize that gold was that significant, so even beating out euros, apparently. Then the debt market is in the third spot there. And then this chart here was the one that was really significant to me. This is the DeFi Llama total TVL of all the RWAs. And as you can see, it was just about 0 back before 2022. And it's almost at $1 billion now. So it's growing very, very fast and very, very exciting. Now, I dug into it, and it's not as exciting as you might hope. It is a lot of this is coming on the back of one particular RWA, which is the addition of STUSDT.
Oh, is that Tron's RWA that they're offering?
Yeah, so it's growing very, very fast, and it's supposed to be real world asset tokenization on Tron. I don't ever use Tron though, so I don't really know what's going on. I I know it's huge.
Yeah, but I don't understand why. Do you know why the Ripple, or sorry, not Ripple, but like Stellar has $300 million worth of products on it?
No, it's like this zombie liquidity.
Oh, okay. So apparently you have to sign up through this app called Benji, and this is like FBOXX and one other one as well too. But it's mainly this FBOXX. So let's take a look at this Benji app. So it's an investment app that is called Find Benji. No, it's not Find Benji. I'm looking at it right now. Here we go. Benji Invest. Only available on the App Store. Interesting. Well, I've never heard of this one before, but apparently they've issued $300 million worth of tokenized treasuries on Stellar. New to me.
New to me as well.
Yeah. Oh yeah. Since you're here, I had skipped this story and we were going to come back to it today, but apparently there's been some optimizations for the curve pools. So there's a proposal to optimize the tri-crypto pools and that will boost fee APY.
Yeah, this is kind of one of those classic examples of a lot of people in DeFi are taking a vacation. Mitch obviously is not. He's obviously using the kind of relative quiet to run some like pretty interesting stats. So I haven't gotten to dig in completely. I just read the summary on the governance proposal. And I think the real takeaway is just these real pretty charts, which I feel bad for anyone who's just listening and not watching. So basically the thrust of this is there's a lot of different parameters you can set for these various tri-crypto pools. The classic curve pools basically have the A parameter, and people are fairly familiar with the A parameter because it's been around for a long time. There's a bunch of other fees that get a bunch of other parameters that get attached to tri-crypto pools. And some of these relate to like tuning parameters. Some of these relate to like specific like ways that fees are calculated within the pool. And in particular, when the tri-curve pool got launched, there was it was set with like some different fee parameters here. And without getting into like the weeds of what these specific parameters mean, basically, if you look at like the different out fee here, so here this first set of charts is like the kind of current ordinary setting. You can look and see
what is the out fee? What is the out fee?
Okay, so that's a whole separate like conversation, but basically there's like there's a bunch of like parameters you can tune with like how it handles fees when the pools are in balanced and imbalanced states. So I could pull that up if we want to have like a separate like 10-minute tangent on it for now.
Well, no, I mean just like give us so what you're saying is that like as the curve pools become more imbalanced, the fees get higher.
It's not quite like that, which is why it's going to take me like 10 minutes and only get some of my research together to explain that one. So let's table that one for another day. Let's just assume that there's parameters that exist within the pool that are configurable, right? So out fee being one of them, and then there's two additional parameters related to fees, which is what these charts are all sweeping over, which is the fee gamma and the gamma parameter. Again, we're going to just table discussion what the parameters mean and just kind of take it as like a given. The important part is that if you look at the different colors on the right, you can see what the kind of max value for the APY would be. So in this case, like depending on different trading conditions, you can see that like it's got this heat map depending on what the fee and fee gamma are currently. And very heavily, you get the most fees when it's in like in this bottom left quadrant. But they're maxing out at like a 12% APY. Scroll down just a bit, and you can see if the out fee is actually raised, you can see that it still is clustering around the bottom left, but now the max APYs creep up to 16%. And if you go down all the way to an out fee of 2%, it gets even higher here. So it's still clustered on the bottom left, but here the APYs are closer to like 30%. And then you can repeat this and look at it for like other parameters like slippage, volume. And here at the out fee, at the highest setting of 2.5%, it's like bordering on like 40%.
No, I mean, they've got an out fee of 5% down at the bottom. Check it out. Keep going.
Oh, yeah.
Yeah, over 50%.
So yeah, like, and you can see like it's like it clusters slightly in terms of like how it moves. So again, the important thing to stress is like these are like simulations of like what the expected behavior might be. Once you actually tweak these fees, sometimes it can affect like behavior with how people do interact with the pool. So what Mitch is proposing is basically take some of these parameters that seem to be working very well for TriCurve, apply it to one of the TriCrypto pools, I think the USDC one, measure it, see how it does against its kind of like split test counterpart, the USDT pool. And if it looks good, then go ahead and post it.
So can you keep going down to the dot graphs? Yeah. So here, can you go to the top one? So this is
the top one here, the APYs.
Yeah. So this is essentially like as they raise the out fee, the APYs on the pools get higher, right? And I think that the charts that Michael's looking at are the next two, right? So keep going down a little bit. So here we have a chart where the y-axis is slippage and the x-axis is the out fee. That sweet spot is right at the 3%. And then also when the volume is on the y-axis now, it's also at 3% as well too. So I think that's where he's getting these optimal numbers from, right? Or at least that's how I make curving this. Yeah. And
if to go through these specifics, this comes from Naga King, who was on our Leviathan just last week. But if you're ever interested in knowing like what the different like parameters mean, he wrote the definitive Substack article on this, which is just available as Substack, nagaking.substack.com. And you can see there's basically three classes of parameters. There's the A parameter, which people should be familiar with if you're familiar with the V1 pools. It's the concentration for the bonding curve. And then it also adds this extra parameter of gamma, which sort of controls the overall breadth of the curve, which is very helpful for like the extreme events. Then there's a few price scaling parameters, which we'll skip over for now. The fee parameters are the minimum fee when the pool is completely balanced is the fee mid. When the pool is at its most imbalanced, you want to charge a higher fee. So that's the fee out. So this is referring to the middle of the curve and the kind of extreme edges of the curve. And then the fee gamma is the parameter that basically controls how quickly it moves between this kind of balanced, imbalanced state. So for much more volatile pools, you're probably going to have like a higher fee gamma.
Yeah, I understand that. So like as you get out to the extremes of the imbalanced curves, the fees start to increase. So like if you're selling out of the pools or like in and out of it, you're paying a higher fee there. And so there's a incentive for people to bring the pool back to balance. So the fees will go down, right?
Correct.
Okay. Interesting. There's some nice charts here. So the mid fee is the fee charge when the pool is completely balanced. Yeah. And then like the gamma just adjusts the shape of the curve. So they're just going to raise the maximum fee that people will pay to 3% at the far end of the curve. What was the gamma as well too here? Like how much were they changing the gamma?
We'll have to go back and check. But the gamma basically is the rate of change, how it changes between fee mid and fee gamma.
Yeah. Well, that's interesting. I think that's some nice deep work for Michael over the weekend to see that.
Absolutely. There's like him and a handful of like MEV bots that understand how these pools work. So we're all really like heavily dependent on him to be like helping us keep track of these. Naga King understands it too. I should sell him short.
I think that's it. Yeah, we'll wrap up there. We've gone through everything today. You missed the beginning of the show where we talked about the stake.com hack. And
Yeah, my
that's
my subs or my Discord's going off, so I don't know much about what's going on, but it looks like it's still developing.
yeah. I mean, they swapped all the stables for ETH. So, oh, wow, another $25.6 million was drained on BSC and Polygon.
Whoa.
Oh, damn.
On what?
Like,
Oh man. So stake.com fully like, wow.
oh my God. And again, it's looking like transfers.
So that's $40 million.
Man.
Wow. Wow. That's pretty incredible. Let me just pull up Zach before we get out of here. That would make it one of the larger hacks of the year. That's unfortunate. Yeah. So Zach says another 25.6 million was drained on BSC and Polygon. Oof. That is rough. That's very tough. Well, stay safe out there.
Yeah. Is it still looking like an inside job there? With
Who knows? I mean, there's no contract data to take a look at, so it's definitely going to have to be looking like it's I don't know, inside. Who knows? I mean, when it's a smart contract exploit, there's always data that people can look at, but in this case, there's just money that's been transferred out. Really unfortunate.
Wow. The ease in which money is lost in DeFi is overwhelming.
Mm-hmm.
Like stuff evaporates.
Yeah, here's a nice picture from.
When you see those high APYs, they come at a cost.
Yeah, well, I mean, stake was not a high APY place; it was for gambling, right?
I don't know anything about stake. I was worried it was MakerDAO, so was relieved to see it's not MakerDAO.
Thank the good Lord.
So midnight to 9 asks inside job, and Tay replies no. Could be an inside job. I don't know. It's hard to see. We'll keep up to date, and we'll have more information come tomorrow. But that's going to wrap it up. I hope everybody has a good Labor Day. Get out and grill. If you're European, you can probably just continue to smoke cigarettes and hang out and wait for May Day, right? To actually, do you know why we celebrate? Do you know why we celebrate Labor Day in September and not May?
Why?
There were no communists back in September, but it was started in like 1894 as a movement, like before the whole communist revolution happened. So it was.
I'm getting through a book on the labor movement right now. It's such an amazing time in history.
I think it has a lot of, like, I was reading about it today, and I think it has a lot of like comparisons to what's happening with the like stablecoin movement on DeFi, right? Where
it's tough to read it and not think of crypto when you think about like the poor, like undertrodden classes basically having to like fight against, because so the labor movement, like we think like the government's been oppressive to us, but the labor movement was bloody. Like it was common to find people like who were like speaking in favor of like unionization get hanged or like dismembered. Like our trials are like relatively minor compared to the like the bloody history that it took to get things like a 2-day weekend and like basic safety procedures like not locking people in factories as they burned.
What year are you guys referring to? Like what years? What time in history exactly is that?
I'm referring to the late 1800s, early 1900s.
1800s, yeah. And if you want to listen to a great podcast about this and you have several hours to dive into this, one of my favorite podcasts is called MartyrMade. I don't know if you've listened to this at all. Have you?
I don't listen to podcasts.
Oh, you don't listen to well, this is actually very great. So MartyrMade runs MartyrMade is a like history buff, and so he did this podcast on where is it called? It's called Who's America? No. Anyways, I'll post it. It's about like the miners of the time. And it looks at like the labor movement, specifically how it culminated with these like mine revolts in West Virginia. And it's a great podcast.
And if you're more of the audiobook persuasion, this is the one I'm listening to, which has Howard Zinn's People's History of the United States. It's even longer. I'm listening to an audiobook, and it's like 30 hours or something because it gets into it. But not if you have a weak stomach, but it goes through and chronicles the history of the United States from the point of view of those who were less successful. So we get labor, we get the history of the Columbus through the eyes of the Native Americans. We have a pretty bloody past, but it's fascinating history.
Yeah. So this is the one. It's called Who's America? And it talks about how back in 1921, 10 to 20,000 armed coal miners marched on Mingo County, West Virginia to lift martial law imposed there, freed their jailed brethren, and avenged the assassination of one of their local heroes. And they picked up guns and they fought the army. It was the largest conflict in the post Civil War era. Between like an uprising of people and the federal government. Really interesting story. Like I didn't actually know about this. It's pretty awesome. Podcast is like
I had a job out of college in that area, so it was really really fascinating history stuff. I had no idea.
Yeah, I mean that's where my family's from. So
no way.
Like yeah. Well, not Mingo County, but like in West Virginia area.
No way.
Yeah, we knew all about the miners, and I didn't know specifically about like the miner strikes, but like I would go visit my grandma in southern West Virginia, which is not that far from. She doesn't live that far from. Well, she's dead now, but
near Kanawha County.
Yeah. So she's my family was from Beckley, which is not that far from Mingo County.
Yeah, I never got to visit Mingo. I just heard it's very real there.
It's not far. I mean, like it's beautiful country. And it's like if you go to Beckley, you can drive like 30-40 minutes to get there, but it's very different from what I remember. I mean the fentanyl drug epidemic pretty much hardest hit West Virginia because the industry's been just destroyed there. All the coal's gone, and with all the coal left all the jobs. And the only thing that was left over was the fentanyl, unfortunately.
Yeah, it's fallen to hard times. But anyway, point is, we take some time this Labor Day to study the history of labor and what it means for like the relative privilege we enjoy today.
Yeah, that's right. Because when the labor movement was formed, I'd probably say 30%, 40% of people were in unions. And that peaked in the 1940s at about like 60% of all workers in the 1940s were union members. And now it's down to about 13%. So like the things that the labor movement were pushing, which was like the Labor Day was a celebration of actual like union members and labor organizers, fighting to get rid of child labor or like shorter work days or, paid holidays, workers' compensation. These were all things happening at the time with extreme pushback from the federal government. And eventually they rallied and were able to, organize and use the union to regain power from the oppressive company owners. You're muted.
The funny thing is, it turns out markets being closed on weekends was actually a feature, not a bug. That's something we had to fight for. And now we in crypto we're upending it with.
Exactly.
Anyway.
Well, have a good weekend. Go barbecue. It's a beautiful day out. It's gonna be hot today here in New York, so I will be outside. And
hope you can handle it outside, man.
Yeah, I know. All right, I'll talk to you later, guys. See everyone tomorrow. Thanks for tuning into the live stream. And goodbye, squids and squidettes.
Goodbye.